Good evening, everybody. But tonight we got Hubert with us again, which is always a great pleasure. Two reasons. Hubert's a very good friend, and he is one of the professional investors that will demonstrate how to use trading systems that are just common sense applications. So every time we have Hubert on, everybody enjoys and gets a lot out of his presentations. So with that, Hubert, welcome back. We're anxious again to see what you've got for us tonight.
Thank you, Steve. Thank you very much. All right, so I am dyslexic, and I use one of these little drawy things, so I got to make sure that all my technology is working here. So let me see if my little pen thingy is working. So, pen, please. There we go. All right, if you can read this, give me the answer to it on this side of things, and that will make sure that my technology is working the right way. Awesome. Okay, cool. All right, so really quick note here. How many people have seen, I saw Steve do this last night, so I want to try it. How many people have seen my presentation on Ichimoku? All right, that's what I'm going to cover tonight, Ichimoku, all right? So maybe you'll pick up a few things. No, yes, no, yes. All right, so I've got a little bit of mix there, so that's not bad. All right, so if you're a candlestick fan, number one, you have to use candlesticks with Ichimoku. You do not have to use Ichimoku with candlesticks, although I think it adds a part to it, but it is not required, okay? So what I'm going to do in today's webinar, or tonight's webinar, wherever you're at in the country, is I'm going to go over how I scan for trades and either they're beginning new trends or trend reversals, okay? So, and this is my stuff that I start with first, okay? So I'm going to walk you through Ichimoku, what it is, how it's calculated, how to use it properly according to me, if that means anything to you. I know a lot of people teach you a lot of different things. I'm going to actually show you catch some moves in the bonds to the downside, gold to the downside, indexes to the high side. And then I'm actually going to scan for new trades tomorrow in front of you and show you, like, hey, here's some new trades that you can potentially do in these actual either futures contracts or stocks, okay? So I'm going to teach you, share a few things with you. Go in depth, and then I'm going to do it live in front of you and go, look, these are the trades that I'm looking to take tomorrow. And if I can get a bond to work out, I'll throw a bond trade on for you now. So I'll give you the blanket warning disclaimer. Danger, Will Robinson. You're probably going to lose all of your cash trying to figure out how to trade for a living, all right? I've been trading for 20-plus years, and there's still tons of days that the markets get me and I don't get them. My trading style may not mesh with you a lot, okay? But it might. Like, I have a lot of little losses. Like, I'll have little loss, little loss, little loss, little loss, little loss, little loss, and then I'll have a big old gain. That's how my trading is structured. I don't have the highest probability, like 98% stuff. That's not me. I can't do that. I don't do that stuff. What I can do is I can take something that's, 40 or 50%, and I'll just take little loss, little loss, little loss, little loss, and then big old gain. So I make sure that my risk to reward ratios are right for me. But make sure that you read these disclaimers because they are very, very important. Specifically, CFTC Rule 4.41. I'm still registered. I have a Series 3 and a Series 30. Just means I took a test, got 70s on them. The reason I'm registered is because I didn't like paying retail commissions. So I have seats on the exchanges that I either trade on or I lease the seats. So that's why I'm registered. You don't have to be registered in order to do that stuff. I also started up like a futures IB in order to cut my commissions in even lower. All right. So you are probably going to lose a lot of your money learning how to trade. All right. When I'm talking about hypothetical, I'll say hypothetical. CME and CBOT, Mark J. It's very, very important when I'm talking about hypothetical or simulated performance. Past performance is not indicative of future returns. I don't make money every day, every week, every month. There's some years I don't make money, all right? So I totally recommend that you have multiple sources of income because trading's hard. I always like to go a little bit further in the disclaimer and say that your trading career is probably going to be like a bad country song in reverse. Your wife is going to leave you, probably for your best friend. Your kids are going to grow up to hate you because that's how they kind of do it in country songs. Your dog's going to die. There's no cats in country songs. They're going to repossess your Ford or Chevy pickup truck, and they're also going to foreclose on your single wide or your double wide trailer. you understand this disclaimer, give me a yes in the chat box. That means I did my job to scare you to death about not wanting to trade. All right, and then if the CFTC or the NFA do from time to time, they will be going, okay, he did it better than most. He's scared the living daylights out of them. They should know what they're at. All right. As stated earlier, my name is Hubert Senters. I'm kind of known in the investing niche as having a no BS approach to trading and investing. I trade more futures than anything, and then I trade stocks. So the majority of my trading is futures and stocks. That's what I mainly do, but I dabble in everything else. If there's a market and I think I can make money in it, I will do it, okay? So let's get started here. So now I already covered that the market gets me and sometimes I get the market. So what I did when I was 17, I was born and raised in the hills of eastern Kentucky, and there were only a few things that I could have potentially gravitated towards when I was a kid, and there were about 1, 2, 3, 4, 5 different things. Both my mother and father were factory workers for American Standard, which you've probably seen their faucets, commodes, sinks, and plumbing fixtures and stuff like that. And I could have been a coal miner, but I was like, man, I don't like the prospects of either being electrocuted, drowned, or a cave. The other three were the risk rewards were not there for me. So it was the weed or the cannabis, the marijuana business, and I mean illegal, not legal. Could have went into the myth, or not the myth, but the meth business, or could have went into the old moonshine business. All right. How in the world do the guys on A&E or the Discovery Channel do the moonshine thing without getting convicted? Because they're actually doing it, making the money. Wouldn't that be like committing a murder and then putting it on TV and then getting? It's just weird. I don't understand it. But anyway, these three just did not have a good risk-to-reward ratio for me. I figured if I was going to be good at them, I would end up in a jail cell, in a orange jumpsuit, trying to fight Bubba, who gets the top bunk. So when I was a kid, 17, I left the house and decided I wanted to be successful. And like everyone else in America, I figured that the more money you made, the more successful you were. It's not really true. Usually it's the relationships, the family, the friends, and all that stuff jazzes you up more than the toys and the boats and the guns and all that good stuff. I've never seen anybody go from start to a lot of cash in less than 8 to 12 years. It usually takes at least that much. You are going to have to work your ass off in order to do that. Blood, sweat, and tears. It won't just fall from the skies, unfortunately. All right? I've also never seen somebody go like this, although you hear a lot of people just taking incremental steps and eventually figuring it out. What I have found out by doing multiple, interviews with lots of people, okay, and just figuring out how to make money. And there's really 3 ways that I recommend you try to make money in the United States. And in no particular order here would be trading and investing, okay, real estate, and or investing in other businesses. And I do some angel investing and stuff. I invest in companies like Slack and Uber and Twitter and Facebook and stuff like that on the angel side, which is really, really, really cool. It's kind of like lotto type money and stuff. If you're interested in that, I can kind of show you how to get into that stuff. So usually success is like this. You start and you either get a few little lucky breaks and you're smart enough to figure out, like, I should just keep on doing this. But most of us have enough failures where we get pissed off enough to go, I'm just not going to stop. And then you get this wild, crazy, just journey that you go on, and you eventually get here. Then once you get here, you'd better have another goal to set for yourself, or you're going to get really bored really quickly. So in a couple of our masterminds that we're in, I've had the fortune to meet some people. This is actually a picture of me and Paula Abdul. She's actually about 6 inches shorter in this photo because she's got 6-inch heels on. This is Sir Richard Branson, and he's got longer hair than I do in that photo. In this photo, I got about 3 good, maybe 4 solid chins there, which means he'll probably be 120 before I see 60. Who knows there? And then this is the Mr. Wonderful on the hit series, the Shark Tank. And then this is Dave Ramsey. This is me. I'm actually in front of these LCD screens. These are just 24-inch LCD screens. I got about 6 of them that I'm sitting in front of right now. I've got one of those cool desks where you hit a button and it goes up and down. And I'm talking on this broadcast quality microphone. I am not wearing this garbage. I never wear this stuff unless it's for like a magazine or something. I have a pair of tennis shoes on, a pair of jeans, and a T-shirt, and that's it. All right. So when I was a kid growing up, I watched a lot of Ghost of Mr. Chicken, Scooby-Doo, and Batman, which is a weird combination. But I always watched those, and I was like, man, I really want to, if I ever make enough money, I'm going to build the big house on the hill, and I want to have some of these bookcase doors that lead to my secret lair. And so every day, my commute is really short. It takes about 8 seconds to get downstairs, and then I pull this book, and I hit this button, and it opens up into a secret about 15 to 1,800 square foot office that me and my team work in every day. All right. So I don't say any of this to impress you because, number one, I don't think it's impressive. I say it to impress upon you if a fat redneck with dyslexia from Kentucky can do this, I think you've got a good shot too, okay? It is not a get-rich-quick scheme. You are going to have to put in some blood, sweat, and tears, and you're going to lose a lot of money trying to figure out how to do business, real estate, or trading and investing. So let's get started here. So congratulations. I believe you're in the right place at the right time because we've got some really cool stuff going on. And if you are a candlestick fan, you're going to really love this because these two go together like peanut butter and jelly, or chocolate and peanut butter if you're a Reese's fan. So what does this work on? This works on stocks, options, futures, Forex, bonds, gold, and a lot of other commodities. So let's take a look here, what time frames that I prefer to trade on this thing. Now, it is useful for day trading, it's useful for swing trading, and it's useful for investing. I'm going to show you a little bit of that tonight in all three of those time frames. Now, this will be different, but in a good way. I like to cut up and have fun, and we're on this earth a very short amount of time. I do take what I do for a living very serious. I just don't take myself very serious because I've never met anybody that gets out alive, so you might as well have a little bit of fun while you're at it. All right. The following is the back-tested stuff from this strategy, okay? Let's see. Let me just do real quick. How's the audio, guys? Can most people hear me? I know we've got a few comments that it's cutting out, in and out, but it might be where I'm just getting excited and yelling into the mic a little bit. All right, there we go. So most of it's good for everybody. All right, cool. All right. So on the S&P 500, on the last 5 years, the stocks in the indexes, out of 500 stocks, it worked pretty good on 430. So that's about an 86% hit rate. Now, you would have returned a 33% return if you would have taken the long and then the short and then the long and then the long and then the short and then the long. I think that's craziness. I don't think you should have to take every single signal. So what we do is we're just going to use just a good old common sense, and we're going to increase our rate from 33 to 79% by removing the counter trend signals and using either a 3-bar or 3-day confirmation. So if this is a massive uptrend we're in, I don't want you shorting until that uptrend is breached. Does that make sense? So that's how we're going to increase from 33 to 79%. Now, if you trade currencies or Forex, it's been profitable on 29 currencies over the last 10 years. Now, the time frames that I like to use for this, and it's just me personally, you can use whatever time frames you want, higher or lower. I don't really care. And there's no such thing as the best. So if you ever ask me, like, what's the best time frame, there's no such thing. Like if I told you, what's the best way to breathe, your answer would be, well, just breathe, right? All right, so daily, hourly, and 10-minute. All right, so let's go through time frame selection first. Yeah, David, I'll get to that in just a second. So first thing, this slide's very important, so make sure you're looking at the screen. When I'm looking at a daily chart on this screen right here, my time horizon for that particular trade will be weeks of time. Now, that may be 2 weeks, 3 weeks, that could be 52 weeks, all right? Now, it's going to extend to the right on the chart for about a month. So that's going to be anywhere from 20 to 30 days or bars to the right, okay? Now, if I'm looking at an hourly chart, a 60-minute chart, that hourly chart, my time horizon is going to be days. That means I'm going to be in this thing for at least 2 days, maybe 75 days, right? And the chart's going to extend 3 days to the right, all right? 3 days to the right. If I'm looking at a 10-minute time frame, then my time frame is going to be hours, and it's going to extend to the right a minimum of 4 hours. So let's take an example. Let's say that I was a day trader. Well, if I was a day trader and I was looking at an hourly chart, I should have an uptrend for the next 3 days, in theory. All right. If I'm a day trader, I'm looking at a 10-minute chart. Okay, that trade's probably going to be good for 4 hours. Now, they don't always work that way. It would be perfect if it did. That's why we all use stops, right? But if I'm an options trader and I'm trading options and I'm going to do monthly, if I'm trading monthly options, then I want to look at a daily chart. If I'm doing weekly options, I want to look at an hourly chart. Does that make sense? Now, you just have to figure out what your time horizon is first, okay? And then you can work into your chart time frame. And you always want to think risk first, reward second. Never reward first. All right? All right. Now, this is what you want. It's been the #1 technique used in Japan now for 8 years in a row, I believe. It's been in a #1 technical analysis book, and if you've ever had to translate something from Japanese to English to redneck, it can be time-consuming and expensive. So the cool thing about this is you're going to immediately know what's happening on the chart in split seconds. You're going to look at that chart and you're going, I know immediately what I think is going to happen next. It's either going to go higher, lower, or I'm going to leave it alone. Okay? Now, when we're looking at this, I want you to look at these charts when I do this live, and we want to look at it, and all of our chart setups, they have to be either hell yes or we're not touching them. All right? Now, so what I mean by that, there's a good buddy of mine that he goes, have you ever overcommitted to something? Like you just always say, yeah, I can do that. Yeah, I can do that. He's like, you need to stop doing that. It's either hell yes or it's a no. And a maybe's a no and a no's a no. And it'll actually qualify a lot of stuff that you do in life. Now, it catches trends and signals, and it's designed to produce really clear signals. Ichimoku translated means at a glance in English/redneck Kentucky. So let's take a look here and look at the edge for you now. How many of you in here use indicators that show you what happened in the past? Stochastic, MACD, RSI, whatever, right? Just whatever the indicators that you cut your teeth on, right? Tons of people show you in the past. You're like, well, that's great. Some indicators will tell you what's going on in the present, right? Like, all right, here's the present price action. That's helpful. There's very few that will tell you what will go on in the future. Candlesticks being one of them because it predicts the psychology of the markets, right? Which Steve's really, really good at. A couple others are Ichimoku. You can also do Fibonacci's, work for that stuff, for time and price. And then also some Elliott wave stuff will do that, right? This one is simple to use is the reason I like it, because I'm a simple kind of guy. Now, do you have a black chart with a blue thing running from the lower left to the upper right? I'm dyslexic, which means I'm a little slow, which means I teach in a very systematic way. So I'm going to teach you like we're going through like a kindergarten class. I'm not doing it to teach down to you. This is how I teach myself how to do stuff. And then if I can physically do it, then I can teach someone else how to do it. A lot of people ask you like, hey, if you're such a good trader, why do you teach? Heads up, #1, we all don't make money all the time. Heads up, #2, when you teach somebody something, it makes you better at it. And usually when I teach people on a webinar, I actually trade better for the next few weeks. So it's a win-win-win for me. So this thing is called CLOUD. So just type cloud, and we'll just make sure that everybody's following around here. Type cloud in the chat box. Now the theory on Ichimoku is as following. If whatever we're trading is above this blue thingy, and it's called the cloud, if the price action is above the cloud, we're supposed to want to be bullish and stay that way, okay? If the price action is below the blue thingy, which is called the cloud, then we want to be bearish in nature, all right? Now, here's the theory of the cloud. It's going to act like a nice little fluffy pillow or a mini trampoline, or it's not going to work very good. Or it's going to act like a nice little pillow, mini trampoline, mini trampoline, mini trampoline. So there's 1, 2, 3, 4, 5, 6, 7. That's 6 out of 7. Does it work like that all the time? Lord, no. No. This is just an example. Are these commonly available indicators or proprietary? Lou, they're commonly available on every single platform out there that I know that's worth its salt. If you have a charting platform that doesn't have Ichimoku, It just means you got a crappy charting package is all it is. All right, that's all it means. And if your charting package doesn't have Ichimoku, you need to change charting platforms. It's readily available on pretty much everything out there that I know about. All right, now here's why I like this thing so much. You see this right here? This is the cloud. This is telling that this thing is in a massive uptrend, and it should continue to trade up and to the right, or sideways or to the right. So it's got a slant here. You see the slant on the cloud? So it's telling us, hey, even if I sell off, I still have a positive expectation that I'm going to increase in price over time here over the next 30 days. All right. Now, let's take a look at the other components of Ichimoku. So this is the cloud, C-L-O-U-D. Now, everybody write down turning line, or just type in turn, T-U-R-N. This is the turning line. The turning line is a 9-period midpoint average. It's not a 9-point moving average. They're calculated slightly different. So this is going to be a fast moving average type thing, but it's also going to be fairly weak, okay, because it's fast. If it breaks the yellow, the second place it'll go to will be a slower midpoint average and a stronger support. So we've got cloud, C-L-O-U-D. Here we have the turn line, T-U-R-N. Now, everybody write this down. This is called S-T-D for standard. Just type in S-T-D for standard. That just means standard line. All right. Okay. If the yellow does not hold, it'll go to the purple. If the purple does not hold, it'll go to the top of the blue. Now, ideally, it'll come down here and it'll just touch this thing and keep on going. That'd be perfect. Okay? And that'll work for a while. And then it'll get a little bit deeper, and then it'll take a little bit deeper. It'll go past the purple, and then it'll go to the top of the blue or the bottom of the blue. If it goes all the way down here to the top of the blue or the bottom of the blue and closes either 1, 2, or 3 times, now we've got to change directions. Gatorman, social transmitted diseases. Gator, sounds like you got a personal problem, brother. All right. Makes sense so far? Pretty simple. Now, the last line is called a lagging line, because it lags price action. So this is the cloud, C-L-O-U-D. It's the turning line, T-U-R-N. It's the standard line. This is called the lagging line, L-A-G. It's called the lagging line because it lags price. This is why I like this indicator so much. Check this out. This is the past. This is called the present, or also called now. And this is what may probably happen in the future, right? Does that make sense? If the yellow does not hold, I got to get long at the purple line. If the purple doesn't hold, I got to pick up along here or along here. If the bottom of the cloud didn't hold, well, heads up, the ES is in a downtrend and I need to be shorting anyway. All right? So let's go through how all this stuff is calculated. Since Rick is chomping at the bit here, let's cover this for Rick. Are these settings defaults? These are the default settings, yes. All right. The turning line is the midpoint calculation where you take the high and the low of the last 9 days and you divide these by 2. So the price line that's always closest to the price action is the turning line. All right, and this is an old chart of Apple. Check this out. See this massive uptrend Apple is in? And then notice how it went below Apple here, and then it stayed below it. Look at that. It catches trends really, really well. Let's calculate how the turning line is calculated first. So you take today, and this is a daily chart, you count back 9 bars. You find the low, which is 434.39. You find the high in that range, which is 465.75. You add those 2 up, which will be 900.14, and then you divide that by 2, and that's going to come out to be 450.07. And no, I'm not a math genius. The answer is right down here. I got D's in algebra in both high school and college. Okay, so the platform for the most part is going to calculate all this stuff for you. But I know there's probably some doctors and some engineers in the room, and if they don't, they have to know how this stuff's calculated or it freaks them out. So if we know that we're coming from below the cloud and the cloud is red, which means we're bearish, and we slam into the cloud and then we start to roll over through the turning line, if we short here at 450.07, where's our next target going to be? It's going to be at the bottom of the cloud here, target 1. Now, if the bottom of the cloud doesn't hold, which it probably won't because we're coming below the cloud, then target 2 is going to be the standard line, which according to this platform is 425.42, and this is how that's calculated. The standard line is the midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars, then divide it by 2. That number will be your midpoint. So here's how that's done. You're going to take today's price action right there, count back 26 bars, find the low, find the high, add the low and the high, divide that by 2. That number is going to give you 425.42. It's going to show you right there on your platform. So if we break the turning line, we're going to the bottom of the cloud, then we're going to the standard line. Sometimes these things will flip-flop, so you got to pay attention to them, but this is how they're calculated. Midpoint of the turning line and the standard line shifted 26 bars forward. So we're going to take the turning line, which is the fast line, and then we're going to take the standard line, which is the slower line. We'll take the midpoint between those two creatures and fast forward them in the future 26 bars. Here's the same way. You're going to take the turning line, standard line, 26 bars or 26 days. Cloud span B. Midpoint of the high and the low of the last 52 sessions shifted. So on this example, what you're going to do is you're going to take price action here, count back 52 bars, take the midpoint of those two creatures, and fast forward in the future, also 26 bars. And that's how that's calculated. Lagging line is super easy. The lagging line is the price line close shifted 26 bars in the past. So it looks like this. You're going to take the lagging line, you're going to take the price action of today and put it in reverse 26 bars. All right. Here are some signals that are generated by Ichimoku. Now, this is how you pronounce and spell Ichimoku. I'm dyslexic, so I do it like this. I see, and I break it into H-I-M-O-K-U, Ichimoku. Understanding that the Ichimoku study does all calculation and then plots them right. Correct. Yeah, it does it all on its own. Yeah. So there's the lagging line crossing the cloud, which is a very strong but very slow signal. There's the price line crossing the cloud, which is the first one that I recommend that you learn how to use because it's kind of like the Goldilocks trade. It's not too slow, not too fast. It's just right, and it's a great learning way to kind of ease into Ichimoku. Price and the lagging line touching the cloud spans crossing, the turning line crossing the standard line, all different signals that will be generated by Ichimoku. So this is the lagging line. When the lagging line crosses the cloud from the upside down to the downside, if you remember the definition, the lagging line is shifted 26 bars back. So you won't be shorting it right here. You'd actually be shorting it right here in this zone somewhere, which is about $590 or $580 back in the day in Apple, okay? And then you'd have to have this lagging line cross back above the cloud, so we would be short here, right in this area right here, all right? And then you'd have to wait for the blue lagging line to cross the cloud, which means you'd have to have probably 15 or 16 bars above here, which means you'd probably cover your short around 520 or 500 even. That's not a bad trade, but boy, it leaves a lot of meat on the bone. So this is the trade that I recommend you start with instead of that one, is when the price line crosses the cloud and closes, 1 day would be aggressive, 2 days would be moderate, 3 days would be conservative, and then if the lagging line can catch up and cross at the same time, then that'll be a plus, aggressive plus, moderate plus, conservative plus. In this example, we would be short at right around 620. And then we'd have to wait for 1, 2, 3 closes above the cloud, which would give us, we'd be covering around 490. It's a better trade, right? It almost triples what we made on that other trade. I think it quadruples it. Make sense so far? So if we've got 1, 2, or 3, now if you're trading, what makes the cloud turn over? It's because of the price action and the volatility. Like this one right here, you see where it's going from red to blue? So it's telling you heads up, the price action's crossing, and the trend's about to change from red to blue, and you need to start getting long. It's just the math of it is all it is. because you got to remember you're taking the midpoint of the turning and the standard line and you're pointing them 26 in the future. So that's part of it. It's the calculation of it. Here's some other signals you can take. Lagging lines touching the cloud. There are some other faster signals you can do for like scalping when the turning line and the crossing, the turning and the standard line, when they do criss and cross, and then they do crisscross and do crisscross. I don't really have enough time to get into all those because I don't want to be here for 3 hours, all right? So let's talk about bullish signals. Price above the cloud is bullish. Price in the clouds are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price and the lagging line will often find support at cloud's edges. Cloud spans crossing may be a sign that the trend is about to change. And be on the lookout for a thick cloud after a run, which could mean a trend change. Excuse me. Now, my throat's getting a little sore, so what I'm going to do is I'm going to put up the bearish signals. When you're done reading this slide, just type done. And then once I see a bunch of dones, I'm just going to take a little sip of tea here real quick. And as soon as I see a bunch of dones, I'll go to the next slide. Oh, that's much better. Nice little bedtime tea here. What makes the thick cloud? The volatility of whatever you're trading makes the thick cloud, Rick. 3, there's 4. See if we can get some more dones here so we don't leave anybody behind. So the bearish signals are really just the equal and opposite of the longs. Okay. Now, I know it's a lot to cover, but we're going to wrap it all up here, and now we're going to do it live, okay? So we got a lot of dones here. So let's talk about stop losses because it is important. Now, remember that time frame thing. There's no such thing as a best time frame, okay? There's just what you're into and what you like. I like the daily, the hourly, and the 10-minute. Now, does anybody in here suffer from being a serial killer of profits? Here's what I mean by that. Once you get in a trade, do you jump out and turn into a big wuss, or do you hold a winning trade and let it go back against you for a negative result? And we call that being a serial killer of profits. You jump out too soon or you hold stuff too long. Either one of those apply to you. Now, I'm not laughing because I've been trading for 20 years. I would be lying to you if I told you I've never done it. I've done it thousands of times, right? There is an indicator that's built into almost every platform called a parabolic SAR. If you just mess around with that indicator some, that thing will help you trail your stop losses a lot better, okay? So take a look at parabolic SAR. And we'll talk about bottom of the cloud if you're long and top of the cloud if you're short, but those tend to be a little large in nature. So what we're going to do here is I'm going to discard this slide. I'm going to walk through. Now we're going to do the live part, okay? And then I'm going to do a lot of this at the end too, but I'm going to do this in the middle, and then at the end of the PowerPoint presentation and of this live scanning session, what I'm going to give you the opportunity to is throw me out some signals, and then I'll take a look at them for you, and I'll tell you what I think they're going to do. For this example, I'm just going to be looking at day charts, all right? Even though I've got the access to do daily, 60, and 10-minute, and I'll show you why, just so it'll kind of just pop you in the nose here real quick. All right, so let's go through the markets in a systematic fashion. So what I want to do here, zoom this down here. I'm going to give you as much chart space as I can. All right. Does everybody see my trade station? I'm going to look at the ES first. Now, should you be long or short the ES? Let me remove this indicator too. There. Make it even clearer. Should you be long or short the ES at this point? Long, right? It's above the cloud. It's above the turning and the standard. It acts like it wants to go higher, right? Now, if we're going to compare the 4 indexes, so this is the S&P. Does the S&P look stronger or weaker compared to the Dow? That's the Dow. Which one looks stronger, Dow or S&P? I feel like I'm at the doctor's office. So let's take a look at the S&P again. I'm going to point out a couple things to you. You see how the S&P pulled back to the turning line, stayed down there for 2 days, and then bounced up? Did the Dow do that? The Dow actually never closed down there. It actually touched it, did not go below it, and then smacked right back up. See that? So the Dow is stronger. So if you're like, all right, which one would you trade? Well, for me, I'd trade the Dow because I have a seats on the Dow exchange, and it's dirt cheap for me to trade. And number two, it's stronger. What are the yellow and purple lines? This is the turning line, and that's the standard line, and that's the lagging line, and this is the cloud. All right, let's take a look at the NASDAQ. NASDAQ, right now, it's a long, but it looks kind of crappy, doesn't it? Because it's sideways. It's in a little bit of a traffic jam there. You see that? So S&P looks way better than it. Dow looks light years ahead of it. So in the NASDAQ, it's not really screaming, this is a great long. Even though it's a decent long, it's not a great long. So you just go, pass, I'm not doing it. What does the Russell look like? The Russell looks like in a massive uptrend, and it pulled back, and you should have bought it today. Does everybody see that? Pretty simple, right? You see how immediate your eye just captures stuff and go, oh, that's easy, that's a long. Oh, that's easy, that NASDAQ's nasty, I should just leave it alone. So let's take a look at the Euro Bund. On the Euro Bund, what is that? Is that a long or a short? Yeah, that's a short all day long, right? All right, let's take a look at the DAX. What's the DAX? DAX is a screaming long. Look at that thing. All right, let's take a look at the Euro Stoxx 50. Euro Stoxx 50, screaming long. Let's take a look at our 10-year note. And heads up, full disclosure, I'm short bonds. What do you think I've been since about middle of September? Which way you think I've been trading bonds? On the long side or the short side? And I'm no genius here, but that's a short, that's a short, that's a short. This is a short, and that's a short. So if I've been trading the 10-year to the downside, which way you think I've been trading the 30-year? These are targets that I have set up for lower prices for myself. Yeah, it's a short, right? Pretty simple. Okay, now heads up, where's gold going? Ever since it broke this cloud, sell-off, bounce into overhead resistance, sell-off, overhead resistance, sell-off, overhead resistance, sell-off. This thing's going to go to 1100. Same thing for silver. Silver's probably going lower, right? Let's take a look at crude oil. What's the first thing you notice? This is definitely not a hell yeah trade, is it? It's a little messy, isn't it? See how it's a little messy, back and forth, back and forth? We just don't touch that. Just like, no, not with my cash. No. We're playing the markets, and the market's going to play us. We set the game. If we don't like the game, we take our ball and we go home. All right? Let's take a look at some other markets, and then I'm going to show you a cool way to scan for stocks and new trades and stuff. So if you look at feeder cattle, it's a new long right there. That doesn't look too bad. Take a look at live cattle. It's a new long right there. That looks pretty good. Take a look at lean hogs. Also in Kentucky, we call this stuff bacon. So lean hogs, looks like they're going to go to 65. Let's take a look here at cocoa. If you've never traded cocoa, which way you reckon cocoa's going to go? Cocoa looks like it's going to go to about 2,000. Let's take a look at coffee. Coffee, it's definitely a short. You see that? Now, it bounced up to the turning line and smacked it and got overhead resistance, kind of like whack-a-mole. Up, pop, in the head and goes lower. All right, let's watch how cool this is, though. I'm going to scan for everything in the S&P 500 today that went above or below the cloud. Watch this. I'm going to go click, 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 click. You see where this says new below? AES is newly below the cloud. Now, this is an ugly setup. Look at this. It's not one that we would trade, though, right? So you still have to do a little bit of work just because it's a little sideways, right? So it's not a perfect setup. It's not bad, but there's better setups out there, all right? So then let's take a look at ALLE. It's newly below the cloud. Newly below the cloud. That's better. I like that one a little bit better. Let's take a look at EQIX, newly below the cloud. It's a little sloppy. It's not perfect, a little sloppy. EQT, little sloppy. ESRX, little sloppy. Ah, here we go. Perfect one. ERX. So we only had to scan through 5 of them really quick. Massive downtrend, bounce into the cloud, and roll back over. You see how we had to go through EAS? We just had to filter. First, out of the S&P 500, we've got maybe 20 stocks. We got about 10 or 12 newly below the cloud, and we have about 8 or 9 that are newly above the cloud. Does everybody see that in my scanner? So let's take a look at newly above the cloud. Like, let's take, DPS. Dr. Pepper Snapple. That's a perfect long right there. 1, 2, 3 bars above the cloud, probably going to go to 94. All right, now I can scan this. Check this out. I can scan for either a daily scan, a 10-minute scan, or a 60-minute scan. All I have to do in my scanner is go, all right, Chief, what I'd like you to do here is go right-click, format all symbols, and scan for a 10-minute new above or below the cloud. You understand how powerful that is? If I scan for a 10-minute signal, what is the time horizon for a 10-minute buy or sell signal? 4 hours, right? If I scan for a 60-minute signal, what's the time horizon? 4 days. You see how cool that is? Now, you may be saying, Hubert, I don't have TradeStation. Well, you can do the same type of thing in TOS. It's just a little more, it's more clicks. It's more difficult to do, but you can still do it. You can also do it on, now you can do it in stock charts, S-T-O-C-K. Let me walk you through how to do it on stock charts. And this is just for stocks. It's a free service, won't cost you a dime. Can everybody see the website stock charts on my PC right now? So I'm going to scroll down here. Let me see if you can, tell me if you can see it or not. Yeah, you can scan for a weekly too if you want. All right. E-Trade, I don't think you can do it on E-Trade, no. But it does work. I don't know if, does E-Trade even have Ichimoku? Yeah, okay. All right, so watch this. I'm going to go previous additional tools. I'm going to click there one time. And then what I'm going to do is I'm going to scroll down, okay, down here where it says candlestick indicators. And you see where it says down here under Ichimoku? And you have to say it like that or it won't work. All right, where it says Ichimoku moved above the cloud or below the cloud. Number one, this should tell you something. We have 230 new move above and 173 move below the cloud. So we're probably bullish. What you're going to do is you're going to hold down the control key and hit left click and then left click. What that's going to do is that's going to set over here a chain of events which now I can sort by exchange, and then I can come down here to the NASDAQ and go, okay, you're telling me that ARLP is newly above the cloud. Yes. You're telling me that ATHN is newly above the cloud. Yes. I don't believe you. Let me see that. All right. Hold down control. Click that button right there. And then all you have to do is format this thing to make it look like my charts on TradeStation, which just means remove all this crap that's on here and just put Ichimoku full and then put none. And then let's just clean this up a little bit. This is a free service. It only does stocks, though, and on a swing basis, a daily. And then just hit update. Boom, shakalaka. Now, if I did everything right, which it looks like I did, there's a new trade above the cloud. Does that make sense? And now I can just cheat and go over here. Okay, that looks good. Is there anything else that looks appetizing? Well, C-A-S-Y. C-A-S-Y. I'm going to hit copy. I'm going to come over here, and I'm going to cheat and just go copy, paste. And that's newly above the cloud. That looks like a pretty good setup. Let's talk about the short side. If you don't want to do long side, we're going to filter for new below the cloud. And then here is C-A-R-B. Let me find one that's Q-I-X, which I found in TradeStation. Oh, here's John Deere. Let's take a look at John Deere real quick. Now, I'm just randomly picking these because these are above or below the cloud. Okay? And then go boom right there. Chink. Let's see if it's below the cloud. Yeah, so it closed below the cloud. So John Deere's probably going to go a little bit lower. That's a little bit sideways, so I don't know if I'd trade that one. But does it make sense how I'm doing this? Use a systematic approach to finding new stuff that either broke above the cloud or below the cloud. That's how you do it there on that piece of software. You can also do this same type of stuff on Ninja, Sierra Charts. You can do it on Thinkorswim, TOS, some Ameritrade, all those guys' stuff, all right? So let me hit my PowerPoint here, and then at the end of the PowerPoint, I'm going to give you an opportunity to invest in your trading education to learn how to use Ichimoku even more. And then what you can do is if you want me to look at your particular symbol, all I ask is you just do it in all caps so I can read it in one per line. And just let me get through these slides, and then I'll do that for you. All right? So best stop to use, I would start out with parabolic SAR. So I looked at some live charts, right? We did that. Oh, let me show you really quickly. These are some of the trades that we found before I go on. Cloud scans, we do these scanning sessions once a week on usually Tuesday, where we all get together and we scan the markets. And here's some of the longs that we filtered through this past Tuesday. So these were our long top picks. So, you know, copper, lean hogs, the Russell, the YM, ADP, FAST, GD, Goldman Sachs, JB Hunt, Paychex, AT&T, Verizon. These were the new signals that actually presented themselves Tuesday. These right here were, okay? So Apple, well, it's went higher since then. COG actually pulled back, so not a great example. ES pulled back a little bit, so that one's shifting, so we're going to have to move it off the list. FOX holding its own. PFE, that's a good trade. That's 3 days above the cloud. And remember, you want to grade these 1, 2, or 3 candles above or below the cloud. And then LEG, nice little pop there. DLR, holding its own, still on the watch list. DPS, there's Dr. Pepper. I still like that one. EQIX, that one's a little choppy. Intel was looking good Tuesday. Looks good today. Merck, MRK, new break above, and PPL. And then some of the shorts that we like were these. You know, gold, coffee, sugar, 10-year, 30-year, CMG lower, and then IRM lower. That's a perfect, look at that IRM. That's a good looking little short. So that's how that stuff works, and you just got to spend a little bit of time scanning it, but it'll save you an enormous amount of time. And then you can use your candlesticks to time that stuff with. All right, so we looked at some live charts. Here are some success stories from other folks other than myself. The course was awesome. I've taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade, shorted again where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during the course. I have the hardest head in the world. You couldn't have made it simpler, Mary. Here's one from Greg. Evidently, Greg still says dude, the same way I say awesome. Thanks. You're likely the only reason I have kept at it with trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the Global Trading class. Thank you so much for all you do. And then here's just an endorsement from Ron. Webinar series was a great experience, very informative, educational, lots of fun. So will you be one of our next success stories? Now, I cannot guarantee you're going to succeed in anything. I can't guarantee when you go to bed at night you'll wake up in the morning. There's no guarantees in life and or trading. But we are inviting you to join us. So first let's talk about who this is not for, okay? This is not for holy grail seekers, which should have been spelled grail, but I'm dyslexic. If you're a holy grail seeker, if you suffer from hopium, these two diseases right here, holy grail seekers or hopium, is if you really like get rich quick schemes, that's not what this is. If you think you're going to take a $5,000 account and by the end of January turn it into $1.5 million, I hate to burst your bubble, but that shit's not going to happen. Okay, that's not how trading works. If you follow me and Steven and 40 other guys online, pick one or two of us that you like and try to absorb as much as you can from one or two guys, and then move on to the next guys. If you follow too many people, we're all going to have different opinions because we have different time frames and different objectives on these different trades that we do, and it's just going to confuse the hell out of you. If you can't make a decision, I am definitely not your guy. If you like to make things more complicated for no good reason, please never take my courses, all right? Now, let's talk about who this is for. If you're serious about making real money in the markets, all right, if you are looking for a proven system, which Ichimoku does have a really good back-tested history, okay, if you can follow a simple set of rules and directions, if you know that your success is tied to taking action and you are ultimately responsible for your own trading, then you and I will probably get along just fine. Here's a fraction of what you will learn. Number one, it's the #1 best-selling Ichimoku course on the market. I'm going to share with you 7 proven, battle-tested setups with trading rules and indicator settings, checklist with cheat sheets, with entries and exits, stop losses and targets, how to scan the markets with Ichimoku, how to filter out the best trades so that you never guess what to do next. And I'm also going to show you how to avoid head fakes, because there's this nasty little trade in Ichimoku called a lagging line hook or a lagging line uppercut, and it will rip your head off if you don't know about it. All right? So let's see here if I can get my slide to advance. The Ichimoku Cloud Charting Secrets course retails for $197. I'm going to do 1, 2, 3, 4 follow-up webinars live where we scan together, kind of like a longer version of what we just did there in the futures markets and those stocks. We just do that. The meetings take about 35 to 45 minutes. Sometimes they'll get longer and take an hour. Just all depends on what's going on in the market. So the class is on demand. You can watch it at your own pace. And then we're going to get together once a week for the next 4 weeks and scan these markets together and pick out trades. I'm also going to let you in the live trading room for a day and see how you like that. $682. Your special offer for tonight is $97. There is a catch. There's always a catch on a webinar, right? Hopefully you got some value out of this presentation, all right? And hopefully you buy the course. But it's only for the first 50 people. We always do a rolling class, and I never want to have more people in there than we can actually serve and make sure that we answer all your questions. If I have 495 people in there, I can't answer all the questions. Like there's a lot of people in here. When you guys hit me with symbols, I got to be able to answer every single question. If I don't, I will feel bad, and I don't like not taking care of people, so I got to be able to sleep at night. So if you go to this link, hubertsenters.com/big, or you can call our telephone number. You'll get Jared. Jared will answer the phone, and he will take your order. But you can go to hubertsenters.com/big, or you can call the telephone number at area code 859-963-3445. All right, so I want to keep my word and do a scanning session here for you. If you give me your chart symbol, heads up, 1 per line, 1 per line. Don't be greedy on me too much. Let everybody have a chance. But 1 per line. I'm going to look here on a daily chart and tell you what I would do with that particular trade. All right. Now I'm also going to, I got the link right here, and I know Steven's already shared it with you. I'm going to put it right here so I don't have to keep saying it, because usually I don't have to try to hard sell people on this. They either see the value of the thing or they don't. All right. So let me scroll down here. All right. So real quick, how did you guys like the presentation on Ichimoku? Pretty good. Now, if I miss somebody, just keep doing it. All right. So here's CSX. I'm going to try to do this fast. CSX, good long, stop $34.91, target $42. FDC. Let me see if there's a better way for me to look at your symbols and do this at the same. I don't think there is. All right. SWMS. SWMS. Okay. I couldn't type that one. NAT. NAT is a good short, a better short than it is long, but right now it's in the cloud. Don't touch it until it breaks 876 with a target of $7. FCX. FCX, good looking long, be long at 14. Target is $17. CAT. Caterpillar is a long right now at 93.38 and a target of $100. AMAT. AMAT is a long with a stop of 32.16 and a target of $37. FDC. FDC is FDC. All right, now on this stuff, if you're looking at a daily chart when it broke below the turning and the standard, you kind of want it to tag the cloud, or what you got to wait for is a 10-minute or a 60-minute buy signal there on that FDC. Okay, so you need to be a little patient on that one. BKCC. BKCC is, that's a beautiful looking little short. That thing's going to go back and revisit this low here around $6.84 with a stop of $7.58. That's funny, Barbara. SGMS. I'm sorry, I'm dyslexic. That is a good-looking long. Should have been long today. Stop will be $14-ish. Target $18. AMZN. That's pretty funny. Amazon. Amazon is sideways. It's doing the sideways shuffle. It's a better short than long because it's below the cloud, but it needs to break 751 to be a really good short. NUGT, it's a short, right? Gold's going down. It's a short. It's going to go to $0. It won't go to zero, but it's definitely going to break below 5, right? So Nugget is going to go the way of gold at GC, and gold's going to go to 1,100, then 1,000, and then 900. So the same thing's going to happen to Nugget. ASM. ASM is a beautiful. Look at that gap down, sideways gap down. I wouldn't own it. It's a silver and gold thing. Dear goodness, that's a great short. It's going to go to $1, which is not very far away. ASM, NFLX, Netflix. Good looking long, a little gappy, but a good looking long. Stop of 119. Target will be 135. MBA. MBA, good looking long, little choppy for my taste. See this band of choppiness? A little choppy, but it's got some potential. Stop of 83.63 and a target of $92. Where am I at here in my list? MB, WBA, GSE. Good long with a stop at 54.35 and a target of $70. NLY is a great short with a target of target would be $9. Stop would be 10.16. I got lost. Where'd I go? NLY, BSX. All right, so this is a good looking trade set, but you got to use a little patience here. See how it closed above the yellow and above the purple? It tends to want to go up here and tag the cloud when it does that. So I would either wait for it to tag the cloud and then roll over, then short it, or wait for it to close below 20.98 and then short it then with the target down here around $19. It's just a little bit more. You got to use the finesse on that one a little bit more. CMG, also known as Salmonella. Salmonella is still a good short with a stop of about 400. Right now it's got support at 360, so it's not a good risk-to-reward trade. It's not terrible. It's just not a great risk-reward trade that I would throw on, even though they got some bad press still. ST. All right, ST. Oh, I can't type. STLD. Good looking long. Beautiful looking long. Steel Dynamics. You could either go long tomorrow and use a stop of 35.34 and a target of about $45, or wait until it closes above 37.92. It's good looking long though. Halliburton looks better than crude oil. I'd buy Halliburton with a stop right now at 51.57 and a target of $60. ROST. ROST is a little weird. It's got this gap, but it's buyable here with a stop of 65.41 and a target of $73. DRYS. It's crap. It's just dog ugly. I mean, there's nothing, you can't do anything with it. It's it's dead money. Dead money. And I'm sorry if I offend you, but that's dead money. That's a hard thing to trade, man. Where are you in it at? Dixie? Where are you in it at, or is it a long or a short? It just looks like a nightmare. It looks like a lot of people got conned into here and then just got absolutely destroyed right there and they're stuck in it. It's the story that it looks like anyway. CIG, that one's a tough one. I would just. It was at a high today. Clock's right twice a day, right? It still looks very, very nasty. I mean, I see what you're saying. It was at a high today. It's just, man, it's just got all this bad stuff associated with it. I would just stay away from it. Just be very careful on that stuff, all right? Just be very, very careful with it. Yeah. Yeah. Oh, and consider, yep. There's probably 9,000 better things to trade if I were you. All right. CIG. CIG. Good short. Good short. Probably going to go to 180 with a stop of 220. Looks like it wants to go a little bit lower. PIR. PIR is good looking long, breaking away to the high side. Stop would be 746. Target be around $11. Will this work on future smaller time frames? Yes, Randy. I use it on. I usually like a 10-minute, but I'll break it and go below a 5 on some stuff. I've seen people do it on a 1, 2, 3, 4-minute chart, ones to fives, and do it successfully. Yes, I would use an anchor chart to keep you on the right side of the market, though, is what I would do. Okay. Oh, let's see. MO. Let me see here. MO. Good long with a stop of 65.22 and a target of $68. Let me get my ink out over here. It's causing us problems. How about Forex? Works great on Forex markets. Yeah. A bit off topic, but do you know what the symbol in parentheses after TradeStation tickers mean? It depends on what it's asking you in TradeStation. This means hard to borrow. Tesla, hard to borrow, which means it's going to be hard to short that in a TradeStation account. That's all that means. Okay, CC. We'll do a few more here. CC, great looking little long. Great looking little long. Stop 23.34 and a target of $30. CHK, Chesapeake Energy. Decent long. I would probably buy it at 673 to 650. Yep. Thank you, Stephen. Appreciate it. Let me see here. Where am I at here? I like AT&T. Actually, we're long in our portfolio on AT&T. So it was along here, here, and here. It looks really good. Next place AT&T is probably going to go is probably $43. But we like it. Yep, it looks good. It's actually been one of our trades in our portfolio. CY. Let me see here on a CY. Decent long with a stop of 10.75 and a target of 12.50. INCY. Decent long with a stop of 100, target of 120. XLU. XLU is S&P Utility Spotters. It's a better short than it is long. Stop would have to be 49.06. Target would be 46. Do you think gold is going to get slammed again tomorrow? No, it's Friday. It'll probably bounce a little bit. And then Sunday, Monday, and Tuesday it'll probably get annihilated. Yeah. MU. Micron Technologies is a good long with a target of 22. Let's see what gold's doing right now. Yeah, gold right now is up $2 from the 1:30 p.m. settlement. So gold's probably going to bounce a little bit. It had a double average true range today, so it's probably going to bounce a little bit tomorrow. Mm-hmm. How do you determine the price targets? In my head, I do a calculation over. I figure out what my risk is and multiply my risk times 2, 3, or 4, and that's my target. That's how I'm doing that. It's just old trader trick. Risk-reward ratios. AMGN. Amgen is a, pay attention to Amgen. I don't touch them when they're in the cloud. It either has to come back down here and close below the cloud, or it's going to work its way through the cloud. So this is my don't touch this zone once it's in the cloud. It's definitely, I would pay attention to it, but I wouldn't trade it until it either goes above or below the cloud. CVS. CVS is a good short with a stop of 80 and a target of 70. NVIDIA is a good-looking long with a stop of 94, 95. I'd actually use 93.74. Target would be 120. EA, good aggressive long. It's just barely crossing, so it'd be aggressive. Stop would be 79.06. Target would be $85. TNT. All right, these are the last two I'm going to do. Or TNA, I'm sorry. TNA. TNA is a good long with a stop of, ooh, that's too big of a stop. We can't use 88. That's too what? You're going to have to use something like 99.24 and a target of 115. B A B A B A B A. Good looking short stop 93.23 and a target of $80. And then last but not least, AMAT. AMAT is a great looking long with a stop of 30.60 and a target of $36. That's going to do it for me, guys. Hopefully you enjoyed the presentation on Ichimoku. Get you a little training on it. It's a great strategy to use. It's a good way to methodically go through the market and scan for good trades that are either above the cloud or below the cloud, and then use what Steve's taught you with candlesticks. And if you come down here and you start seeing stuff that crosses above or below the cloud, and then you see candlestick formations around either the turning line, standard line, or the cloud, that's going to reinforce what you need to do with that thing. All right. Good luck. I hope it helps. Steve, thanks for having me, and I'll see you guys on the next one.